Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week. Another week of red sentiment, of bad sentiment due to trade wars, tariffs, and not enough sentiment on the economic data. I think we are all thinking the same. When this is going to happen? When this is going to change? And I think we are starting to see some hints about that. We are going to check that in the price action analysis. But right now, the current landscape is even more complex than last week. Conflicting signals, challenging signals to maybe establish a definitive bullish or bearish outlook. That's one thing that is certain. Market can support bad news, but the uncertainty is what kills the market. We are seeing some positive indicators like Fed Powell's assessment of a solid and balanced job market, echoing the solid February jobs numbers. Plans to boost the US manufacturing employment and upward revision in the US productivity also paint a good picture of potential economic revitalization and long-term expansion. However, these are tempered by significant headwinds. And one of the biggest concerns is the potential for trade wars. There's no potential anymore. We are in a official trade wars with Canada, Mexico, coupled with China's retaliatory measures, like imposing a 25% tariff on Canada pork and seafood imports and 100% tariff on Canadian oil imports. These introduce significant risk to global trade and economic stability. These factors contribute to the uncertainty highlighted by Fed officials like Kugler, who noted a high level of uncertainty around tariffs and their inflationary effects, and Daly, who acknowledged mixed signals and elevated uncertainty in the economy. Fed Powell indicated a possible slowdown in consumer spending. Remember that consumer spending is 1/3 of the US GDP growth. And Fed's Harker noted waning consumer and business confidence. Also, on top of this, we have Goldman Sachs cutting its 2025 US GDP growth forecast to 1.7% versus the prior forecast of 2.2%. This is really concerning, signaling an increased economic caution. These factors collectively create this complex environment, which is so difficult to trade. So in terms of economic data, we had the biggest data of the week, non-farm payrolls, which missed forecast, but a little bit better than the previous one, which is not that bad. But unemployment rate ticked up from 4% to 4.1%. Slight increase, weakening labor market. But the Fed is supportive of the good health of the labor market. So I think we are seeing this kind of push in the price action, which we are going to jump right now. We are seeing this push in the price action. Let me just couple this with the market internals, because this is the weekly chart on the NQ. We've been pulling back for 11% in 3 weeks, 2,300 points from top to bottom. This is pretty huge. The last time we had that was last year, 16% in summer. So if we are checking that on the ES, we are also seeing the same. The ES pulled back from all-time highs 8% in 3 weeks. And the last time we had that was 10% in summer last year. So if we check the market internals for the ES and for the NQ, we can see how things develop for this week. And we see something interesting. In terms of volume, we started the week in a pretty bad shape, but 2 days, Wednesday and Friday, were ticking up in terms of volume. However, in terms of advanced decliners, we are seeing this choppy price action in both the ES and also on the Qs. On the Qs, we are seeing this chop, which is a signal, a signature of what is uncertain in the market, but a little bit of push also on Wednesdays and Fridays. So if we check the daily on the NQs, we can see this big pullback. But look at this candle. This candle was one of the two green candles on the daily, but it's pretty bullish. And I think we might have some kind of relief bounce if we start seeing some kind of good catalysts. If we go to the 1 hour and I prepare already this line is the 200 daily moving average on the daily. This line is the 200 in this time frame, in the 1 hour. We are seeing a conjunction in this zone in which we have an inverse fair value gap on the 1 hour. So between 20,600s and 700s or even 800s, we might have an opportunity to push because we have this manipulation move and the daily candle, which remember looks like this. So how can we set up some kind of opportunities to take advantage of this push that might happen next week? We had this setup that I always trade. I couldn't take it on Friday because I was off, but this inverse coupled with this bullish fair value gap and also this order block, another order block, I think we might have some pullbacks, but I will be watching this zone here for an opportunity to have a trade into the 800s. That is, I would say, a lot of buy-side liquidity. So this is the setup that I will be watching next week. I think after 3 weeks of completely negative sentiment, it is time. Why I say that? Because other markets on the daily are also showing this kind of correlation. The Russell 2000 small caps are also showing bullish signatures. We are also seeing bullish signatures on the XLF, on the financials. Look at this candle. And also we are seeing semiconductors pushing a little bit and having a zone of maybe buying opportunities for big investors. And also correlations in terms of weakness, a lot of weakness in the dollar. We are in a bullish daily order block after 3.8% on the dollar pullback. But the main thing of concern is yields. The 2-year yield is holding, the 10-year yield is pulling back, giving these concerns about recession. But I think I have this sentiment, I have this expectation of maybe next week is that reversal, or at least that kind of continuation to the upside in these time frames. So I will be watching that, but the main thing is being on top of news, on top of every single catalyst, because this is the market we are in with Trump's presidency. Any tweet, any news, any bit of information from all over the world can change the sentiment in the blink of an eye, and that's the volatility we are in, and this is here to stay. So you need patience, you need discipline, and you need risk management in this market right now. This is going to be the year of a lot of things, a lot of negative things, but also big opportunities. So stay on top of this because I think it's worth the effort. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload these weekly recaps every Saturday in which I cover all these things for you to be prepared, to learn how I trade, to learn how I analyze the market, and to really educate yourself in this industry. This is my ultimate goal. So enjoy the weekend, take some rest, do your own diligence with your own analysis, and be prepared for next week on Monday. See you next week.